You are listening to chartingwealth.com for Friday the 17th of August 2018. We see stocks are up for the day, bonds and gold down. If you don't have our book, you can order it still. We're into our fifth printing of Charting Your Way to Wealth. It explains all of the things that we do here at Charting Wealth every day, and it will cue you in completely to the two main methods we use to do our trading. We want you to practice it. We want you to read the book, get the book, follow us every day. Also use the trade worksheet, the daily market, the weekly market worksheets. If you want to accelerate your training, those are for free under the show notes. Everywhere we put everything out, whether it's at iTunes, whether it is the podcast or the video at YouTube or at our channel. If you're a subscriber, free to our daily market review, which also includes the weekly review. It's in the show notes there. So please go to chartingwealth.com, sign up. We'll get everything out to you. Also, you'll see links to purchase the book. Let's jump into these charts. We see that so far on the weekly chart with the S&P 500, we have a red spinning top. So again, we look at the past 5 weeks of up movement in the market. This week opens passing through the two-day trend line, laying right on top of the weekly trend line. We see the derivative oscillator continuing to gain upward momentum. Price percent oscillator still heading up, but it is significantly weaker than it was over the prior weeks. It's not a red down candle. It's a red open box spinning top, which means indecision, tending down. Doesn't mean it's going down. It just tends to go that way. Let's look at the two-day chart. That is going down. Hasn't crossed over going down yet. We just had the latest two-day candle draw. It is a full body red spinning top, which of course means, again, indecision, but more of a downed trend. It is pushed through the two-day trend line, and it is above the weekly at this point in time, but it is setting up sort of a mood of down movement. Once that price percent oscillator crosses over going down, if indeed it does, if it doesn't bounce off, then of course it will be a confirmed down move, but maybe it'll bounce up. We see the derivative oscillator continuing to lose downward momentum. Let's look at the 4-hour chart, though, on this up day, up 0.81% up in the morning, a little further up in the afternoon. Now we see the 4-hour chart not crossing over, but heading up. Price percent oscillators losing downward momentum and heading up. The derivative oscillators also losing downward momentum. It's probably more accurate to say the price percent oscillators heading up and the derivative oscillators losing downward momentum, pushing through the two-day trend line above the weekly. Now, what do we see happening and what can we plan for if it's a big up day on Friday? Well, don't forget, the two-day hasn't crossed over going down and the weekly is up. So if we see a crossover in the morning on the 4-hour chart, if it does that on Friday, might give you a jumping in point for an up move in the S&P 500. So keep your powder dry, pay attention. You might have the opportunity for a practice trade. Remember, we are not a stock calling service. We do not give investment advice. We want you to train with us so that when you get good at doing this, you can make up your own mind when you believe that you attain competency to then make your own decisions about trading. Let's move on. What do we see going on the Qs on the weekly chart? Again, a red spinning open box top. We see the derivative oscillator continuing to lose momentum. Price percent oscillator closer and closer to crossing over going down, but it hasn't done it. This chart is much weaker than those 5 prior green up candles in the S&P 500. The Nasdaq 100 is represented by QQQ, not doing quite as well. Last week was a good week as far as the green open box candlestick going up on our Heiken Ashi candles, but of course we had the two-day chart crossover going down on the two-day chart. Weekly again losing momentum on the derivative oscillator, price percent oscillator heading down, but hasn't crossed over going down yet. Two-day did. It actually sort of paralleled it, what we call laminated over the red signal line, and then started moving away from it pretty strongly over the last 2 days. Derivative oscillator gaining downward momentum, price percent oscillator heading down. We have a red solid candle. So we don't have the opportunity for a trade if the market's up in the morning on the Nasdaq 100 because we have a confirmed down move on the 2-day chart. Even though it was up for the day a little bit, not as much as the S&P that was up 0.81%. The Qs, the Nasdaq 100 up 0.33% up in the morning and then sort of down and meandering in the afternoon. Price percent oscillator heading down, derivative oscillator losing downward momentum. So nothing for the Qs for tomorrow, but we'll keep our eye on the S&P 500 SPY. Let's go now to bonds. Bonds just barely down, 0.01%, 0.1%. What do we see on the weekly chart? Well, a little bit of schizophrenia there as far as our indicators go. Derivative oscillator gaining downward momentum, price percent oscillator trying to head up. Green open box candle at this point with just a wick on top, price movement above the weekly. And remember, the 2-day has been in a confirmed down move, getting closer and closer to crossing over, going up, but hasn't done that yet. Derivative oscillator did pop over to the positive. And of course, we have 3 green up candles that represent 6 days of up movement. But again, don't have a crossover yet. Look at the 2-day chart, and go from the 2-day to the 4-hour. What do we see? Sort of see a sideways side. Again, down a little in the morning, down a little in the afternoon. Overall, down 0.01%. 2 red spinning tops, meaning indecision, tending down. However, price percent oscillator heading up. Derivative oscillators losing momentum. So we got nothing on TLT at this point. What we're waiting for, of course, is something to happen on that 2-day chart to have it moving in the same direction as the weekly, which is not going up all that much. But we'll keep our eye on things. Keep the powder dry. Remember, we trade based upon the trend. We let a trend get set, and then when the trend leads us, the trend is our friend. That's what helps us make our decisions. Lastly, gold down again today, 0.08%. Beautiful, isn't it? Gold has been tracking down strongly since we started forming red candlesticks back on the 27th of April, and only 3 up weeks since then. This is one of the biggest down weeks that we've seen so far, and that is beautiful if you're doing inverse gold trades, that is possibly with a put or with an inverse gold fund. If you haven't listened to our training, Inverse ETFs, How to Make Money When Markets Crash, it's something you ought to listen to. You'll find that at our YouTube channel and at our website, chartingwealth.com. But we see the derivative oscillator gaining downward momentum, price percent oscillator ticking over, moving down on the weekly. We go to the 2-day. What do we see there? Well, big down candle, price percent oscillator kicking over, going down, derivative oscillator gaining downward momentum. And we go to that 4-hour chart. What do we see? Up a little in the morning, down in the afternoon. Derivative oscillators losing some of that downward momentum, but the price percent oscillator, our main oscillators, ticked over, heading down. And of course, we had a jumping in point going down somewhere around, and again, this is using the Heikin-Ashi, which is not the best way to call it because they're measured differently, but somewhere jumping in point around 114, something like that. And of course, down as low as 111.10. So nice differential there. And again, how do you train and track doing inverse trades? Well, just put in the price that you would have purchased it at, that you would have shorted it at, and then how low you let it go. And that'll show you how good you're doing there. I have found over the years, I think one of the easier ways to make money is typically in inverse trades. That is puts, or that is in an inverse fund when the market's going down. For some reason, that's worked better for me than trying to make money on up moves. And that's the beautiful thing about learning how to trade, is you can make money when the market goes up or down if you gain that sophistication, and you need to be practicing that. That's where we are, folks, as we end the day on Thursday, go into Friday. And of course, at the close of the market tomorrow, what we'll be doing, we'll be recording the weekly. That is our comprehensive review and forecast. We'll review the past week, where the charts are, and where they might be going over the coming week. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.